Yesterday, the euro and the British pound hit new one-month highs. In early trade, demand for the assets was fairly muted as market volatility decreased due to the lack of fundamental statistics. In late trade, market participants received weak data on economic and business optimism in the United States, which seems to have supported the risky currencies. However, the euro and the pound sterling failed to consolidate above their one-month peaks. Today's macroeconomic calendar is devoid of any major news releases from the euro area, except for data on Italian retail sales. However, this indicator of secondary importance and is unlikely to affect market sentiment. All eyes will be on US inflation data and minutes from the Federal Reserve's most recent policy meeting. Notably, the last time the US inflation rate decreased was in October 2023. This means that inflationary pressures remain stubbornly high. Given the state of the US economy and labor market, consumer price inflation is unlikely to ease anytime soon. This could prompt the central bank to stay the course on monetary tightening, thus hurting the economy but keeping the dollar strong. Economists anticipate the consumer price index for March to show that consumer prices rose by 0.3% on the monthly basis, down from a 0.4% increase in February. On the yearly basis, the CPI is seen rising by 3.4%. If data is above consensus estimates, demand for the greenback will return on expectations that the Fed's monetary policy will remain restrictive for longer. In this case, a summer rate cut is unlikely. If data shows a slowdown in core CPI growth, the US dollar is expected to suffer losses, with the euro and the British pound extending gains. Minutes from the Fed's March meeting could also weigh on the greenback if policymakers express the need to ease monetary policy. In this case, the risky assets may well gain strong upside momentum. Now, let's move on to technical analysis. According to the 1-hour chart EUR USD, a false breakout at 1.0849 will generate a strong buy signal, pushing the euro to the one-month high of 1.0882. If the price breaks through and consolidates above this level, the pair will advance to 1.0909. In case of weak US data, the European currency has every chance of climbing to 1.0942. At this mark, I recommend going short on a rebound to catch an intraday correction of 25-30 pips. Short trades at 1.0882 and 1.0909 can be considered only amid a false breakout, as counter-trend trading is too risky. If bulls regain control of 0849 and test it from the top down, the market will face a sell-off, with the euro diving to 0823 and probably 0794, especially if data shows that US inflation remains high. At the level of 1.0794, it will be a wise decision to go long on rebound, expecting a 25-30 pip move. Going long at 0823 and 0849 will be relevant in the event of a false breakout. Speaking of the British pound, it has been trading upwards since April the 2nd. A false breakout at 1.2664 will make it possible to buy the pair in anticipation of a rise to 1.2700. If the price consolidates above this level and tested from the top down after US inflation data, sterling will most likely climb to 1.2732 and 2765. At the level of 2765, traders are recommended to go short on the rebound to catch an intraday correction of 25-30 pips. Short positions at 1.2732 and 2700 can only be opened amid a false breakout. In a bear case scenario, if sterling falls below 2664, it will extend losses heading towards 2637 and even 2614. At these marks, it will be possible to go long on a false breakout. Long positions on a rebound can be considered at 1.2576, counting on a 30-35 pip move. Best of luck.